Good morning. You're watching the markets. Well, before the markets, India's favorite cricket maestro, Sachin Tendulkar, turns 50 today. Remember, he's dedicated 24 years of his life serving Indian cricket, scaling some unimaginable numbers. Some of those knocks from back in the day still run afresh in the minds of fans. And a gigantic score of 4,000 runs in his international career, coupled with a mammoth 100 international centuries. Here's wishing the cricketing genius a very happy birthday.
ये किसने?
Okay, back to the markets then. It wasn't as clean a run really for the markets in the week gone by, given that we actually, trudged lower by about almost 1%, dragged once again lower by IT. What held out was once again FMCG and pharma, but unfortunately they didn't have that kind of might to actually pull the markets forward. The key question is, will the Nifty now see a breakout, given that you've got two heavyweights, Reliance as well as ICICI Bank, which have come out with their numbers, and will they really manage to do that trick for the markets or not, Nikunj?
There's Reliance, there is ICICI Bank, and there is a push coming from HDFC Bank. You put all these three together, it's actually 20% plus more weightage on the Nifty. So 20% plus weightage on the Nifty is on the right side of the trade. Now that's a big weightage. Infosys is unlikely to fall more. IT, the collateral damage has already been done. So that makes it about 35%. So 35% weightage now would be working in favor of the bulls. Markets always look for a trigger. Is this combination of Reliance, ICICI Bank and that news flow push from HDFC Bank, is this combination good enough to take Nifty out of this range which we've struggled in the last couple of days? The breakout moment of 17,800, 17,850, will that happen because of the push? I hope so. That's what SGX is indicating, and that is what I guess the market setup is, that the news flow because of heavyweights may just align things in the right direction, and we could be in for a good start to the week, considering that the result momentum has now picked up.
Yeah, and speaking of result momentum, just let's recap then what heavyweight Reliance Industries doled out on Friday's session. That's, of course, post-market hours when I say Friday's session. And you had the revenues, which came in at about 2.12 lakh crore rupees. It was the highest consolidated profit growth that the company delivered, up 22% in the last 5 quarters at 19,299 crore rupees. And the company's consolidated EBITDA was higher, and that was largely driven by the by the O2C segment as well. You had Reliance Industries, then ICICI Bank, as Nikunj flagged off, and just looking at these two heavyweights closely, Nikunj, the brokerage notes that have filtered in over the weekend, all giving a big thumbs up to the strong show delivered by both of these heavyweights, a buy or an overweight rating for majority.
So, Reliance numbers are not the ones which will re-rate the stock, but after months of disappointing and underperformance, these numbers will ensure that there could be no further collateral damage to the stock purely based on numbers. So the good bit is that the O2C business has stabilized. Geo and retail is growing, but the trends for this quarter are weak. So you are not in for a huge upgrade from Reliance, but the fact that things, at least in the O2C business, are stabilizing, which means in the near term, the cash flow and a lot of other slowdown concerns which were there, at least in the O2C business, that's been taken care of. ICICI Bank, on the other hand, I think it has ticked all the boxes. Net interest income, margin expansion, commentary in terms of where the credit offtake is likely to move, and how subsidiaries are filing full cylinders. So ICICI Bank has been an overweight stock. It's a buy. And I think post these numbers, a 15 to 25 rupee move in ICICI Bank cannot be ruled out. Frankly, large part of the attention of late has moved to HDFC Bank, but I think ICICI Bank now will come back and occupy the center stage. The gap should narrow down further, even though ICICI Bank has been a great performing stock. Let's look at the earnings upgrade. And the EPS upgrades for ICICI Bank may just warrant 2 to 3% upside, at least in the short term, immediately.
We are looking at the brokerage upgrades coming in, not just for ICICI Bank, but first Reliance. JP Morgan maintains its overweight with a target price of 29.60. Motilal Oswal a buy with a target price of 2800. And the most bullish price target for Reliance Industries on the street is coming in from Jefferies, which has put a 3100 rupee per share price target on a 12-month basis on RIL. Then, of course, ICICI Bank, wherein both the PAT as well as the NII has managed to meet the estimates. The asset quality has seen an improvement. And ICICI Bank, it's pretty much a consensus coming in there as well. CLSA a buy, 1200 is the price target put on that one. So a 4-digit price target coming in from pretty much across the board. JP Morgan overweight, price target 1150. Jefferies buy, price target 1180. But you know what? That's not it. You've got a massive, or rather a big week in terms of earnings. This one as well. Everything from an IndusInd Bank to a Bajaj Auto, Nestle, Tata Consumer, HDFC Life, Maruti, Bajaj Finance with its weightage of 2.3% on the index, SBI Life, Wipro, Axis, Bajaj Finserv, Tech Mahindra, Unilever, as well as Ultratech Cement. So a total of almost 18% of the Nifty weightage declares its numbers this week, Nikunj.
Yeah, so 18% weightage due, 18% weightage will react to numbers today. So which in a sense makes this week in a sense a very important week purely from the perspective of numbers. I think HUL is the big one because HUL has been in performing stocks. So market curiosity will certainly be centered around HUL because that's one company where you really want to hear the gradient demand, impact of monsoon, and there is going to be a change of the guards. That in a sense is important. Bajaj Auto, a bit here and there. The stock technically has done rather well, but in terms of a market opinion, I don't think very large expectations are there. Maruti, yes, couple of tough quarters. Couple of quarters in terms of where they have lost market share. Now the SUV market is coming back, and I think they, in a sense, would really be important from a market standpoint. Then there are a whole host of mid-cap numbers which we'll talk about as this show progresses. Tech Mahindra again, from an vantage standpoint, not because of the environment, but because of a change of guard, and Mohit Joshi from Infosys moves there. So that, in a sense, is going to be key, key number. So it's a busy week and it's an important week because if you come on the right side of this week, then you pretty much know that directionally markets should head higher. And if you look at the market setup, frankly, it's not bad. We've added a 7 to 800 point rally on the Nifty from the recent lows. You've seen a comeback and stabilization in FIF lows. Globally also, it's not looking that bad. NFI selling and commodity prices are behaving themselves. So the setup, I think, is such that you want to be more bullish than bearish. The setup is such that you do not want to cut your longs and you do not want to go short. So stay invested, stay on the course. I think this market has given us 1 week of nice and steady consolidation. This week, let's hope if you're a trader, you should play for the breakout.
Okay, and just going by what the global screen as well has thrown up for us this morning, we are leaning on a bit of support, although it was a mild close then for the US markets, and Asia is a bit mixed. That's the SGX Nifty around 17,696. But yes, we're talking about heavyweights and they're really dominating the headlines this morning. HDFC Bank and HDFC as well will be in the spotlight as the Reserve Bank has allowed both of them to smooth out the merger, and that is set to conclude by the month of July this year. So they've said that they've permitted the bank to meet the priority sector lending requirements, and that's going to be in a staggered fashion over the next 3 years. However, post the merger, HDFC Bank will have to comply with the requirements to hold a certain level of cash reserve ratio, SLR, and liquidity coverage ratio in the entire merged balance sheet, Nikunj, and this is going to be right from the beginning.
Yeah, so there are two things here. One number, it clearly means that the decks are now cleared for the HDFC Limited and HDFC Bank merger. And what the management has been saying, somewhere between 15th of June and 15th of July, it will go through. B, there is going to be a huge impact in terms of what the new ruling is, which is that to put it very simple, the Reserve Bank of India, or RBI in this case, has given some more time to HDFC Bank and to HDFC Limited to really comply to the entire regulatory norms. They get a window, and because of that window, there would be substantial amount of positive impact on the balance sheet of both HDFC Bank and HDFC Limited when it comes to the capital requirement. And because of this, in the near term, the earnings for next 2 years for HDFC Bank and HDFC Limited automatically should go up by about 1.5 to 2% depending on the estimate. I don't think markets in a sense were hoping this. This has come as a surprise, and this has come as a positive surprise. Since this has come as a positive surprise, markets would appreciate that. So HDFC Bank actually may just surprise everybody today with the positive start. I think then it could be ICICI Bank and then Reliance. Now Reliance, the numbers are not that strong that they'll warrant an uptick, but at least there is not going to be any downside. ICICI Bank will warrant an uptick, and HDFC Bank this month, though it's been an outperforming stock, I think will get recognized more.
Okay, there's Wipro buyback as well, although it has to be noted that the buyback quantum has been coming down in the past 3 years, currently at about 9,500 crore rupees. That's what the assumption is. So let's see how that stock as well reacts to ahead of its earnings this week itself. But what about the global commentary coming by over the weekend? Anisha is here with quick takeaways. Anisha?
Hi, good morning. Let me start with the comments coming in from the Morgan Stanley CEO, where he says that the banking system is not facing a crisis at this point of time. It's not a systemic risk, but it's individual banks that mismanage their liabilities and asset books. And that's the reason we are seeing the collapse of regional banks in the US. But he's saying it's very, very far away from what we saw in 2008, so nowhere close to a systemic risk as far as the banking system is concerned. Moving on to the comments coming in from Fed members, and this one is coming from Cook. It's a bit of a mixed, word coming in. She says that if tighter financing conditions are a significant headwind for the economy, the appropriate path of the federal funds rate may be lower than it would be in the absence. However, if the data shows continued strength in the economy and slower disinflation, they may have to do more work. So a bit of mixed commentary coming in from the Fed member there. Bank of England's Deputy Governor talked about how the focus is on tightening monetary policy sufficiently to control the inflation at this point of time and to ensure that there's no inflationary mentality which develops in minds of people as well. He said that when I look at where inflation is and where it needs to get, I'm more focused on making sure that they stay the course and the monetary policy continues to tighten from here on. And lastly, what's making headlines across the globe is the bankruptcy filings coming in from Bed Bath & Beyond. After the likes of JC Penney, Sears, Neiman Marcus, etc., one more retailer really bites the bullet, and we have Bed Bath & Beyond filing for bankruptcy.
All right, thanks very much, Anisha, for giving us a flavor as to what are some of the top headlines as well as the global commentary coming in. Moving right on then, let's connect with Naresh Mirani as well as Kunal Bothra, our chartists. They're joining in to give us an outlook on their top picks as well as the views on the index. And going by the fact that it's going to be an interesting week, Kunal, the fact that we've got a lot of numbers coming in, you have the index that was dragged by tech last week. Are we likely to see some sort of a churn in the markets? What levels are you tracking?
Good morning, Avan. So 3 weeks of straight price uptrend for the index. We managed to scale up some 1,000 points on the Nifty. And then last week was one of the weeks where the Nifty retraced a bit. I would say not a major profit booking, but mild retracement, because in terms of positions, in terms of open interest, in terms of the sector composition, there was in fact a lot many positives which emerged in the index previous week as compared to what we would have expected had it been a major profit booking for the indices. Net, we are still holding that 17,500 mark. The Bank Nifty is still holding about the 42,000 odd levels for itself. So these are two very crucial supports for the respective indices. And the mixture of the markets are also very, very attractive. You've seen many defensive sectors or the erstwhile low beta sectors like the pharma, etc. These stocks have made a very good comeback. The traditional high beta stocks like real estate, sugar, etc. These stocks have also made a good comeback for themselves. So this is a market which is getting a lot more healthier in terms of the mix, and that's why I would believe that the bias has to be on the positive side. 17,500 remains to be a crucial support, and I think closer we are to that kind of a support point, the better the risk reward is to initiate a fresh long.
Right. Naresh, hi morning. Two important numbers and marking 18% of the index weightage, ICICI Bank and Reliance. What are you reading on the charts?
So both of them do not see something like a major impact as such. So at least the numbers are through and the impact is not huge on the downside or on the upside in a big way. Overall, the trend is stronger for ICICI Bank, wherein the stock has continued to be an outperformer over the last few months as well, relative to the banking index. Reliance Industries continues to be in that 2200, 2400 band. Till the time it doesn't go across 2400, 2450, the trend remains weak. So overall on the index also we are yet to see a leadership come in which could take it beyond the 17,850 mark. So for now we get stuck in this range of 17,500 to 17,850 till the time we don't see any leadership in any of the heavyweights. But in that period of time, expect the broader markets to keep seeing selective moves.
Okay, let's nail it down to individual stock recommendations then. And Kunal, let's find out what exactly you're picking out for the day.
So focusing on large cap names, to buy calls over there. The first one is L&T, a stock which I think I discussed last week as well. The risk reward extremely attractive. 2,220 is where the stock closed on Friday. So keeping that risk reward, I would believe that potential upside of 2,300 could be possible for L&T. Buy with a stop loss closer to 2,200. SBI is the other stock which I think is also on the verge of a breakout above that 550 mark. Excellent chart patterns for SBI. Momentum coming back into the stock price. Volumes also making a comeback. Stock crossing above the key moving averages on the daily charts. So all of that is extremely positive for the stock. Targets of 580, stop loss at 525.
Right. Naresh, what about your stock ideas this Monday morning?
So for a change, me and Kunal agree on L&T. That's a stock which has been showing a relative strength as well as leadership. The stock is yet to break out in a strong way above the 52-week highs and all-time highs, which I expect to do so. Very strong base made at 2050 levels, the last breakout point holding on really well. I expect a target price of 2,500 in the short to medium term, a stop loss to be kept at 2,150. Second is a buy on State Bank of India. The stock has made multiple bottoms around that 500 mark over the last couple of months, and now is starting to stage a comeback. Good recovery over the last couple of sessions. I expect a move towards 575, a stop loss to be kept at 530.
Exact same picks picked out by our chartists today. L&T and SBI, they clearly seem to be the hot favorites. But I'm going to focus in on another bank then, and that's HDFC Bank. India is in a shining star against an uncertain global backdrop. That's the word from the HDFC chairman, Deepak Parekh. He believes that there are several factors that make India attractive as a destination for global business. Let's listen in.
So against this uncertain global backdrop, India has increasingly been in the spotlight for being amongst the fastest growing major economies. We are not immune to global disruptions, so some slowdown in growth is inevitable. But since India is a domestic consumption-based economy, the economy is less dependent with global economy. Unlike countries that rely on exports, we are not over-dependent on exports. We have such a large domestic market that whatever is produced is consumed here. I have been on record many, many times in the recent past that India has never been in a stronger position than it is today. In fact, I've said in my 50 years, I've never been as optimistic about the future of our country today as I am. As a country, we are fortunate to see more tailwinds and very few headwinds. What is working well for India is the fact that we have political stability. And I don't see this being disrupted in 2024 either. What is working in India's favor right now? We have food security. We have vaccine security. We have demonstrated the ability to negotiate the import of crude at a lower international prices, which has worked well for our foreign exchange purposes. There has been a steady increase in tax collections owing to better compliance by people. In fact, tax collections last year grew 18%, which was higher than even the budgeted estimates. And when I talk of tax, I'm talking of direct and the GST. Almost all high-frequency indicators are performing well, including a smart recovery by sectors that have been impacted by COVID, such as aviation and hospitality, amongst others. Probably aviation and hospitality are doing much, much better now than they ever did. We are reaping the benefits of having put in place a strong public digital infrastructure, which much of the world now wants to emulate. The Indian banking and financial system, which had its troubles in the earlier days, is now much, much stronger position. All banks are well capitalized. The non-performing loans have come down sharply and the system is strongly regulated. We have a government that is pulling its weight to position the country as a global manufacturing hub. And we also have a government that has aligned itself to the goals of decarbonizing the Indian economy in an orderly manner. These are just a few of the many reasons why India is looking good and why India is looking attractive to the world.
Okay, let's discuss all the numbers that are going to impact the markets this Monday morning. And clearly, Reliance, that's seen a 2% dip in the revenue, but the net profit has managed to jump 22% on a sequential basis. The CMD, Mukesh Ambani, says that initiatives in digital connectivity and organized retail are driving greater efficiencies in the economy. Let me take it across to Somit, my colleague. He's been breaking down the numbers for many quarters now. He joins in with his takeaways. Somit?
Well, in the fourth quarter, if you see, Reliance Industries numbers were pretty much a beat compared to what the street estimates were, and this was largely led by the O2C segment of Reliance Industries. Now, if you see the O2C segment EBITDA, that increased nearly 17% on a sequential basis, while the O2C segment margins were the highest in at least the last 14 quarters. Now, this was because of the steady refining and higher petrochemical margins that we had seen in the fourth quarter. Now, margins were also benefited because of lower energy costs. Now, naphtha, which is a key raw material for Reliance Industries, now prices of the same were lower by around 20% on a sequential basis. Now, apart from the O2C segment, the other three divisions, that is retail, gas exploration and geo, reported pretty much in line set of numbers. There was no surprises on that front. Another net profit jump of 22% seems higher, but this is purely because of the fact that the tax expense for Reliance Industries in the fourth quarter was lower at only 11.6% as against 22%, that the company had reported in the previous quarter. Now, for Reliance, you see the growth was the lowest, the EBITDA growth was the lowest ever since the company has started reporting its financials. However, the key positive coming in for Reliance Industries is the fact that despite higher capital expenditure in the fourth quarter, company's net debt remained largely flat at close to 1,10,000 crore rupees. And moreover, Reliance Industries in its analyst meet also said that they are aiming to maintain its leverage ratio, that is net debt to EBITDA, below 1 time. Now, this is a positive statement coming in from the company because investor concerns regarding the debt were continuously rising because the Reliance Industries was a net debt-free company and suddenly its debt had increased to more than 1 lakh crore rupees. So this statement coming in from Reliance Industries puts a rest to the investor concerns on street. And if you see brokerages, now they have largely maintained their stance on Reliance Industries post the fourth quarter numbers. There has been no major upgrade or downgrade or no major changes in the target price, and this is largely because of the fact that though fourth quarter numbers were a beat because of the O2C segment, sustaining the same going forward is still a concern that analysts have pointed out.
Okay, and let's take that conversation forward. Prabal Sen from ICICI Securities as well joins us on the show right now. Prabal, hi, morning. Thanks for taking the time out. Prabal, the legacy O2C business clearly has managed to do the heavy lifting. It was clearly, lower feedstock which managed to aid the profitability. But is this an assumption that the markets were working with already?
To a certain extent, yes. I think there was a certain amount of OTC strength that was built into estimates. If I look at consolidated EBITDA that was reported, that was broadly in line. I think Somit mentioned that the beat in net profits was also driven a little bit by the kind of tax adjustments that happened. So while it is a strong set of numbers, I wouldn't say that it was a huge positive beat versus what the street was looking at.
Prabal, hi. Just wanted to get in your take as to what the outlook is when it came to the company's retail performance as well, because we did see store expansion this time around. There were higher footfalls that did manage to aid the retail growth, and the net store additions as well have been strong. Do you believe that the retail vertical is likely to propel growth? What are you penciling in?
Frankly, the numbers from the retail segment are staggering. I mean, if you look at it, in a country like India, to sort of get to 65 million square feet plus of area under coverage, and more than 18,000 stores across formats, I think that's a pretty phenomenal achievement, whichever way you slice and dice it. The company has stated very clearly that the capex momentum will continue to be front loaded in this segment. They'll continue to be fairly aggressive in terms of infra rollout for the retail segment. So I would not really be surprised if mid to high double digit revenue and EBITDA growth is something that we continue to see from this segment, at least over the next couple of years. Obviously, going beyond that is a little bit difficult to understand today, because we don't know what format will actually work and what the mix is going to be between offline and online, because that's what the online part of it is also something that they have been really focusing on, and that continues to grow exponentially for them. But on the overall level, I think the retail business should continue to be a significant growth driver for RIL's console earnings for the next 2 to 3 years.
Management indicated that they're going to maintain their net debt to EBITDA below 1 time. But do you think with the kind of massive expansion that we're hearing from the Reliance table and pretty much across the board, especially retail, is that still a concern with the market as to how comfortable the debt levels would be going forward?
I would say I would definitely think that it's a little bit of a concern. It's one of the fundamental reasons why we do not, we continue to be a little bit cautious on the state of FCF and return ratios on the business for the next 2 to 3 years. Because the net debt number, as reported in the presentation, actually does not include spectrum liabilities, which pretty much double the level of net debt straight off, if you really look at it. The 1,10,000 crore number that's presented is reported in the presentation is actually excluding the spectrum liabilities of 1,10,000 crore. So when you add that up, the net debt to EBITDA is actually at a fairly high level, and the capex number of 1.4 trillion is well above, I think, most street estimates. If you had asked at the beginning of the year what people were penciling in, including us, I don't think even the most aggressive assumption would have penciled in more than 1 lakh crore of capex across the businesses. So, I beg your pardon. So if you look at the kind of, as I was just saying, the intent of the business, the intent of the company is that they're comfortable with the front loading of capex that is happening across 5G infra, across the retail business, as I mentioned, and now with the additional petrochemical expansions that were announced in last year's AGM, those will also start to reflect in the next couple of years. Plus, new energy business hasn't really started seeing capex at all, and there's another 80. So if I look at the next 2 to 3 year capex program, very easily 1,10,000 to 1,20,000 crore run rate will continue. So while earnings growth continues to be peer leading, I don't think return ratios will go to double digits or stay there for any period of time. And that remains a little bit of a concern, given that valuations are already at 16 to 17 times 1 year forward earnings, depending on whose numbers you're looking at.
Just a quick word, Prabal, on the stock price of Reliance Industries, what you're advising?
We have an ad rating on the story. We do believe that the earnings growth merits a look at the stock, particularly at these prices. But our fair price of 26.50 already builds in mid-cycle, EV EBITDA multiples for the OTC business, fairly aggressive, 35 to 40 times 1 year forward EBITDA multiples for retail, about 7 to 8 times 1 year forward EBITDA for telecom, and 1.5 times EV to capital employed for the new energy businesses. Unfortunately, that EV reduces a bit because now the net debt number is higher post this quarter results than it was earlier. So we have had to downgrade our target price from 2,800 to about 26.50 levels. So that's where we are. Yeah.
Okay, Prabal, great to have you on the show as always. Thanks for taking the time out. Well, not just Reliance, but ICICI Bank as well is going to be in focus, and the bank has managed to beat the street estimates. It's a healthy asset quality that they have reported, and the NII as well has come in line with the estimates, while the provisions have as well eased. Harsh is here with the key highlights.
Well, yes, the numbers for ICICI Bank reflect a good set. When I'm looking at the net interest income, it's expanded to 17,667 crore, which is a solid 40% growth. We're expecting something around 39% on a year-on-year basis, We're seeing operating profit as well expand, but slightly lower than anticipated. That really shows that the OPEX has gone up for the bank in this particular quarter, and pretty much in line with how HDFC is growing its OPEX. So largely we're seeing the large private sector banks really invest in good times. At least that's what it is at the moment. We're seeing 34% growth with regard to operating profit. It's come in a tad below expectations, as I did mention. We're also seeing provisioning come in much healthier than expected. So provisions have come down. 2,257 crore was the provisions number in Q3 of FY23. It's come in at 1620 crore in Q4. That's a very solid reduction. And we were anticipating, or we had put a number of 2,000 crore on that provisions number for ICICI Bank. So it's coming well below our expectations as well. In terms of where the GNPA ratio is moving, it's moved from 3.07% to 2.81%, a very healthy move, much better than anticipated again. The NNPAs also have moved in a very healthy fashion, down from 0.55% to 0.48%, so 7 bips improvement even there. And we're seeing the PAT having expanded. Really no impact of that OPEX on PAT, largely on the higher OPEX on PAT, largely on the back of better provisioning or lower than expected provisioning that's come through. So PAT has come in at 9,121 crore, which is a solid 9.5% expansion on a sequential basis and 30% growth on a year-on-year basis. The NIM has also expanded, which is a positive. And we're seeing good growth on both sides of the balance sheet, largely in line with expectations. 19% growth on the advances front on a year-on-year basis, deposits growing around 11% on a year-on-year basis. But the telling part here is that when I'm looking at it sequentially, advances have gone up 4.5% and deposits have gone up 5+%. So for the first time in a long time, we're seeing advances growth slightly lower than the deposit growth on a sequential basis, which is something which is telling.
Given the position of our balance sheet, as the repo rates have been increasing, the loan book sort of reprices faster than the borrowings. And I think with repo probably at the peak or near peak, the further expansions on the income side is certainly it has already taken place. Now the catch up on the borrowing from the deposit side will take place. So obviously, we do believe that somewhere the NIMs is near peak, and there would probably be a downward bias as the year progresses. So that is on the margin side. Secondly, which is very normal in the overall scheme of things, and we are very comfortable with the way we have positioned our balance sheet in terms of delivering overall core operating profit. Given the overall macro level, uncertainty in terms of our book, as we have disclosed, we probably have the lowest NPA ratio of about net NPA ratio of 0.48%, and we are not seeing anything on the book side, but on a prudent basis, it is always good to be prudent on these things.
Moving on then, in partial relief for the HDFC twins, the Reserve Bank has allowed HDFC Bank to meet the priority sector lending requirements in a staggered fashion over the next 3 years. Let's listen in to what the management had to say as to what exactly this notice from the Reserve Bank means for the merger process.
On the priority sector lending, the bank is permitted to phase in the ANBC calculation. ANBC is used to determine the priority sector requirement by considering 1/3 of the outstanding loans as on the effective date for the first year. The remaining 2/3 of the portfolio shall be considered over a period of the next 2 years. Incremental loans, including the housing loans, subsequent to the effective date will follow the PSL requirements, business as usual. Investments of HDFC Limited, including HDFC Life, HDFC Ergo, and HDFC AMC, have been approved as investments held in HDFC Bank. HDFC Bank or HDFC Limited are permitted to increase the shareholding to more than 50% in HDFC Life and HDFC Ergo before the effective date of the merger.
Right, let's take that discussion forward. Rahul Malani as well joins in on the show. A lot of banking names which are going to be in focus today. But Rahul, first, let's start off with ICICI Bank. Do you think the numbers are enough to push the stock higher today?
So first of all, good morning. In terms of ICICI results, the results have been ticking all the boxes. there is no complaint. But as far as the outlook is concerned, we believe that from here on, the ROA expansion levers are limited only to the operating leverage, which can help, but which will be partly offset by the NIMS moderation. So overall, we believe that from here on, the strong outperformance and further re-rating will be a gradual one, and which will be based on the sustainable performance and the quality of earnings. Because all the levers in terms of other than that operating leverage, we do not see any ROA expansion lever from here on.
When you say re-rating, what to your mind is a deserving P multiple or price to book for ICICI Bank?
See, basically, what is happening is if you look at the current multiples, they have been trading at around 2 times its 1 year forward. So if we look at the if they continue to give in terms of if we look at the contingent provisions, they have maintained around 1.3%. So it is assumed that they are giving a sustainable performance in terms of, because in banking industry it is very difficult to sustain that 2% ROA multiple quarter after quarter. So it is likely that it is appearing that at least in the near to medium term, at least ICICI Bank would be sustaining that 2% ROA in terms of quarterly run rate. So basically, 2 to 2.5 times is a decent multiple in terms of which we believe that ICICI should get in near to medium term.
Break the HDFC Bank news for us. There are two things here. One, capital requirement norms have been eased by Reserve Bank of India, and then HDFC Life, that overhang of merger is no longer there.
Yes, basically, so near term rally in the HDFC Bank stock is possible on the back of this regulatory relaxation, because priority sector lending requirement itself is the biggest savior, because in terms of it will save around 7 to 10 basis points of in terms of ROA, because it would give a substantial advantage to the HDFC Bank. Had it been not received, they would have to borrow. They have to find a good borrowers in priority sector for such large amount in next 8 to 9 months, and basically the street was not factoring in this. Secondly, the permission to hold more than 50% in the insurance subsidy is more a relief for the shareholders of the HDFC Life in particular, because there would not be any sell overhang, because the regulation permits that you can hold below 30% or either above 50%, and the street was fearing in anticipation, because when in case of Axis Bank, RBI didn't allow to raise the stake. But as in case of SBI as well as in ICICI has the case, in case of HDFC Bank also the RBI has approved. And thirdly, in case of if we look at the inclusion of combined entity in MSCI indices will boost the flows. As far as the capital requirements are concerned, it will be neutral to the ROA, because already they have certain liquid assets around HDFC Limited and HDFC Bank both have around 50,000 crores liquidity additional. So overall,
Right.
1 lakh crore liquidity.
Right. Rahul, great to have you on the show this morning and analyze all the buzzers from banking. Let's see whether they manage to push the Nifty Bank higher, both HDFC Bank and ICICI Bank as well. On that note, we're going to take a very quick break. Come right back. We'll have Sandeep Sabharwal join in on the show.
Sabharwal joins us. Let's take our conversation forward. Sandeep, good morning. Thank you for joining us. What kept you busy over the weekend?
I went to the IPL match, so that was one.
Certainly not Salman Khan's new movie, was it?
No, how I did that this time.
I mean, how is the movie done? Yeah, ब्रह्मास्त्र देखने गए थे भाई, ये तो सलमान खान को देखने नहीं गए आप?
Can't say.
Do you think ICICI Bank and HDFC Bank will keep the bulls busy today?
Yeah, HDFC Bank, actually, it's mixed. The excitement of analysts is tough to understand, because in any case, priority sector lending, and RBI was never going to tell them to do it on the first day itself. It would have just distorted the entire loan book. But the CRR, SLR requirements at a time when NIMs as it is will come under pressure due to
the fact that whatever commentary we heard from ICICI Bank, so that reflects that first the loans get repriced and the deposits get repriced, and to that extent, there will be a hit on margin, and on top of that, the PSL requirements will come in. So I think it's a mixed thing. So no big thing to be excited about, except for the technical factor of the FII flows coming into the merged entity because of the leeway that gets created. And that we've seen has created a buzz in many stocks, including Kotak Bank. So that could be one thing to create the buzz. ICICI Bank results, no complaints. Everything went good. So the NIMs were good. Net interest margin was good. Fee income pickup was good. The asset quality is extraordinarily good. So I think everything is going well. My guess is that the stock will continue to do well. And now the question is what valuations you give. So I think that's also a cyclical thing. I would think that at a time when they're able to maintain asset quality while maintaining such huge contingency reserves, which are actually beyond the entire, they hold reserves which are much more than the net NPA. So in fact, they effectively have zero net NPAs at this stage. So to that extent, it's quite positive. So I would think that incrementally, due to different factors, news flow, as well as fundamentals for both the banks, like you said, should be positive.
So you may have been busy watching the IPL, but there was plenty of stuff keeping the market men busy. There was ICICI Bank's numbers, digesting Reliance Industries, the HDFC Bank news as well. So let's get in a chart check then, Kunal. Just curious as to what your reading is on Reliance Industries. The last 1 month has been interesting from those 2200 levels. It has managed to scale up, but long gone from the 2800, 2850 mark. After these numbers, what's your sense as to how the charts could pan out?
So, one thing was very evident for Reliance Industries, that the stock has managed to up its support. So, from 2200, the stock went to the results with a buffer of almost 120 odd points, so about 2300 levels. Now, interestingly, the stock charts have not yet shown signs of a confirmation of a breakout. Now, just to put it simply, the previous swing high which the stock had made in the month of February was around 2450 mark for Reliance Industries. Even in this leg of uptrend, which means in the last 2-3 weeks, the stock was unable to scale past about the 2450 levels. So what we need to watch out for is, assuming post results the reaction for the stock is positive, and if the stock breaks past about the 2450 mark, that could actually be a strong indication that the bigger downtrend from 2750 odd levels for Reliance Industries, that should be behind us, and we could now be on course of the stock slowly and gradually trending up higher and then breaking past or coming back towards that 2700 mark. So the first level of confirmation which I would wait out for post the results reaction would be if the stock sustains about that 2450 mark or not.
All right, Vodafone. Hello. Kumar Mangalam Birla is back on the board. Why? Is he back on the board? Because look, Birlas, they need to have representation on the board. Government of India may be the largest shareholder, but the company still has ownership of Birlas and the Vodafone Global, Vodafone Inc. in this case. I mean, for me, it appears that he's back on the board largely because nobody else wanted to join the board. I mean, I look at it this way. The stock on last week did go up, but I don't think our viewers should assume anything on the business side just because Kumar Mangalam Birla is back on the board. This business is just going down the barrel, so to speak. Relevance of Vodafone Idea in terms of what it holds for the telecom market and for the stock market, I think is almost zero now. Let's look at Friday's change, please. Friday and Thursday's change. That's when the news came out. Kumar Mangalam Birla is back on the board. And last week, it shot up. Sandeep, can we safely ignore this? Yes, Kumar Mangalam Birla is back on the board, but so what?
It's more of a speculative stock which retail investors tend to dabble in. Now, that might have been a requirement from the bankers that this happens because they need some sort of comfort, etc. So we don't know what's the reason, but it's insignificant as far as the fundamentals of the company go.
The other one, which is other space, Naresh, which is worth revisiting is pharma. We've discussed this for last 8-10 days, but now the backbenchers in the pharma space, Aurobindo Pharma, Lupin, they are also joining the momentum bandwagon. Do you think, Nuresh, pharma has a long way to go?
So I would be a little skeptical here because the moves have been a little erratic. Say it's very surprising that say Aurobindo Pharma is actually up 40% from the recent lows and it did not come up on the radar because the charts were damaged in such a bad way for a lot of these names. So it went from 1050 in 2020 and all the way down to 400. So that's like a 60% fall in a period of time and the markets have not gone in a one-way downtick. So if one wants to play, say, safe, it is Dr. Reddy's and Sun Pharma. Dr. Reddy's has made a 52-week high and a strong move. Sun Pharma has been a relatively sideways stock. If someone wants to take a risk, then there is Lupin and Laurus Labs because both have fallen a good 30 to 50% from the top. Even from the top of 1250 in 2021, Lupin has now made a bottom around 600, 650. So down 50% from that. And now last 3-4 sessions, it has seen good volumes and price action. So, but would keep a stop loss at the recent swing lows. So a stop loss below 295 for Laurus, 660 for Lupin. That's a trade which would say go up from here on. But one has to be very strict with the stop losses because the longer term trend is still yet to change for these names.
And Sandeep, curious about your take on Sun Pharma. I don't know if you've read the news with respect to the update by the US FDA inspection. They've directed the company to take certain corrective actions at the Mohali facility. Is it very incremental according to you?
Incrementally a small negative, and that's the issue we see with a lot of these pharma companies. We don't know when some regulatory action will come, and many times, and these issues happen too frequently. So I think that's the only challenge investing in the pharma sector in companies which are exporting or relying on the US jurisdiction a lot.
Right, stay on with us. In the meantime, you've got partial relief from the Reserve Bank for HDFC Bank. They can now have an over 50% stake as well in HDFC Life. Let's understand what this means for the insurance arm. My colleague Sharad is here to explain it to us. Sharad?
Well, yes, in focus we are having HDFC Life, and overall the stake sale overhang is gone. Now this is because of RBI allowing HDFC Bank to increase their stake by more than 50% in HDFC Life. Now had this not been allowed earlier, then HDFC Bank would have actually sold the stake and get their minimum stake to at least 30% in HDFC Life Insurance. Now what happens because of this? The overall supply overhang, which could have been of almost 18.65% in HDFC Life, that has gone, and apart from that, now there's a possibility that HDFC Bank could actually increase this stake by almost 1.35% stake before the merger. Now let's looking at the total investors in it. We can see HDFC Life's major shareholders include HDFC with almost 48.65% stake, with also big investors such as Aberdeen and Exide Life. Apart from this, now let's look at the important triggers going ahead, and this means that HDFC Bank becomes the majority shareholder of HDFC Life, and of course do remember that the alignment of interest would be there for both categories of shareholders in both their entities. Apart from this, also there is a possibility that the HDFC Life's counter share is expected to increase at HDFC Bank, leading to higher growth numbers. And to put it in perspective of the annualized premium equivalent, which is APE in an insurance company, currently HDFC Bank contributes almost 50% of it, so that's a major chunk. But going ahead, of course, the cost of distribution, that is expected to come down, and because of that the margins are expected to go up, as what the analysts are stating.
Sandeep, let's understand that for markets to go higher, what are the ingredients required in the melting pot? Markets are no longer oversold, Sandeep. There is no mass fear, which was there, let's say, in March or April beginning. That phase is behind us now.
Yeah, fear is not there, but skepticism is quite high. So I think to that extent, that's supportive of the markets. So for markets to move higher, we need to be convinced that the interest rate cycle is peaked out. So I think once I'm convinced about that, there is still people who doubt that because of based on RBI commentary. But I think the bar for the MPC to increase rates further is so high now that it will be virtually impossible for them to do that. So I think that should be supportive overall globally. Also, we've seen that global analysis, the BOFA report suggests that cash holding of global investors is at highs which was seen during the financial crisis. So I think globally also there is skepticism, and that's normally positive for the markets. What could go wrong for the Indian markets is if, let's say, the monsoon actually fail miserably, and that creates other issues related to inflation, etc., and overall slowdown in consumption growth. So I think that remains the risk, but predicting the weather is so tough that I wouldn't be taking a bet just based on that.
So you are not of the view that we are in for a giant rally. You are of the view that incrementally things will move higher, but it's not that markets will rush to make a new high.
So that is very tough to predict, like in the sense that how the flows pan out, we don't know. The speed of the rally will be tough to judge, but I actually wouldn't like a very aggressive up move also, because slow up moves will get built over time, help stocks perform, and to that extent, you can actually pick out stocks, take your time, and the potential to outperformance is greater.
We've had a good comeback in real estate stocks, and now that's getting more and more endorsed with the kind of commentary which we're getting. DLF, remember, they were able to raise 7,800 crore in a single project in Gurgaon in less than 2 weeks. That re-rated the DLF stock from 350 to 406. Max Ventures, they've been able to lock a lot of rental income. We have the management of Prestige today to talk us to what is happening in Bangalore and in Mumbai. But you got macro tech developers, and they've given a guidance, and hear me out guys, 14,500 crore. The brand is Lodha. Close to our office, close to my house, close to your house also, right? Lodha? No. Lodha is everywhere there in Bombay. How come it's not close to your house? Abhishek Lodha, what are you doing? Aisha cannot see Lodha in the morning. There has to be some construction there. No, just think about it. It's there everywhere now.
Dominant by two other players, but anyway.
Sandeep, here's this management which everybody knows about it, nobody spoke about it, and look at the stock, macro tech developers. Solid commentary, outperforming stock, and they're doing all the right things.
Yeah, so the real estate has done very well, and it's also held up in the light of the increasing interest rates. Now, there was a rush of buying at the end of March because of the tax law changes also. So that also helped these companies grow. So some companies remain inherently very bullish, and to that extent, they always give aggressive guidance. So I think guidance is something we take with a pinch of salt. But overall performance of real estate sector looks good. Macro tech, I frankly haven't looked at specifically.
Nuresh, which is your favorite real estate stock for the day, for the week, and maybe for next 2-3 months?
So that would be DLF only, because that's the strongest chart over the last 1 year. The stock is coming back to the same prices. So it made a top around 420, 430 in September of 21. This has been the fastest recovery. So the strength in terms of relative ways is only DLF.
Right. Sun Pharma, that's the other one which is going to be in focus. The update has come in. The US FDA inspection at the company's Mohali, which is their Punjab facility. US FDA has classified now the inspection as OAI, which is official action initiated or indicated. They've received a letter titled Consent Decree Correspondence Non-Compliance Letter from the US FDA. So basically, they've directed the company to take corrective actions at their Mohali facility. It creates a temporary supply disruption then from Mohali, and CAPA is going to be taken before releasing further final product batches now into the US. So Sun Pharma definitely is going to be one stock in focus after that 1 month uptick of 7% or so. Today could be a knee-jerk negative reaction on Sun Pharma that you may see. Kunal, how resilient is this pharma rally?
I think it's very resilient, Aisha, because in fact, I was looking at the charts for pharma index. The rally which started off for the pharma index is on the back of some extremely strong recovery in the RSI. So this reminds, at least in terms of technical charts, what started off in 2020 or the first the major rally for 2020, where the RSI started to move from an oversold territory to an overbought territory in just a matter of few weeks, and that led to a very strong uptick for the pharma index beyond that. So these kind of strong moves in RSI, they generally are indicative that a near-term trend has changed, and you would now probably expect the pharma index to go into a stronger recovery mode. Look at it this way, that initially it was just Sun Pharma and Cipla which were doing pretty well for, say, in 2022 till second half. But then today, you have the likes of Dr. Reddy, which has recovered. It's come back towards a fresh, multi-month high. You've Aurobindo Pharma, Zydus Life, there are Glenmark Pharma. So there are good large caps as well as mid cap stocks which have recovered as well as performed very well in this move of uptrend. So which means that the breadth of the pharma index in the sector is getting a lot more vibrant than what it was in the second half of 2022, and that itself could be an indication that this trend would sustain. So my sense is that this pharma index rally is here to stay for some more time.
Some other stocks that will be in the spotlight, yes, bank as well, coming out with its numbers. The NII was up about 7% sequentially. Provisions have lowered on a QOQ basis by about 27%, and the PAT saw pretty dismal growth on a year-on-year basis, but sequentially has managed to scale up to about 202 crores. Macrotech developers as well came out with earnings, pretty disappointing. The net profit has been the only redeeming factor, up nearly 40%, but otherwise revenue from operations, EBITDA has all been pretty flat. So those as well are some of the other stocks to keep on your radar. Meantime, let's get in a check then, Naresh, from you as to what the outlook is on some of the buzzers on Friday's trading session. You had something like a Mahindra Holidays, which was up 3.5%, and Westlife as well, active around the 700 mark. Your view?
So Mahindra Holidays is an interesting long-term chart. The stock has been, say, for the last six months, it has not fallen below 250, 260, very stable around those levels, and the range on the upper end is 300. So it's been in this tight range, making a consolidation. Then if we go a little longer term, the last top for the stock was around that 300 mark in 2017. The stock was at 240 back in 2010, and going forward. So it's like a 12 to 15 year breakout on cards. So if it can sustain about 300, 310, it has a longer term possibility to do a very large move. So Mahindra Holidays looks interesting. Westlife is a tough one to call, but if you look at McDonald's US, that's hit a new all-time high. So overall, Westlife is a little too early. Once it sustains about 750, that would be a breakout. But Mahindra Holidays looks promising as a, say, a 12 to 15 year breakout.
Westlife Food Work. It's very interesting that you've got this entire slowdown impact is not there in Westlife Food Work, or for that matter Devyani International or any of the QSR restaurants. Devyani International, it really shot up, came down, now it's flat. Sandeep, anything special that Indians are betting on? Not pizzas and burgers. Jubilant Food Work is not going anywhere, but Westlife, which is in McDonald's burgers, that's doing well. I mean, is it an indication that Vada Pav will soon be taken over by burgers?
So I think it's reflective of where the competitive intensity is more. So I think Jubilant clearly is getting hit by the kind of expansion which the franchises of some of the other pizza chains are doing, and the announcement of a new pizza chain coming in. So I think pizza is a segment where competitive intensity is the highest today, and to that extent, for these companies to take price hikes becomes tougher. On the where Westlife stands, I think there the competitive intensity is quite low, and to that extent, that's also reflective in the way stock has done. The management out there has also indicated some slowdown in consumption trend. That's across the board. Now the key is that as inflation peaks and things play out, consumption should improve in India. So I think that's what people should bet on. So these companies, if they are down 20, 30, 40% from the top, like I think some of them are down 30, 40% from the top after huge euphoria. So some of them could be interesting.
Okay, come tomorrow, and Mankind Pharma IPO is going to open. Sandeep, a lot of excitement in the market for this one. Questions being raised whether you're going to get any subscription or allotment also to begin with or not. But does it become a subscribe?
So its valuations are not as expensive as most of the recent IPOs, but then it's a pure domestic pharma company, and to that extent, at a valuation of around 32, 33 times. It's not really cheap. We can say it's not expensive, but it's not also cheap. So I don't see a big story there, and the entire offer is an offer for sale. So I think uh, all these offer for sale IPOs I don't like so much. So let's see.
Okay, that's the take coming in on Mankind. In the meantime, the pre-open rates on your screen, let's just revisit what they're indicating. While the index may be quiet, let's start off with Reliance Industries and ICICI Bank. That's where you're going to see the first earnings reactions kick in. So Reliance Industries will just come up for you on your screens. Right now holding up 1% as we speak right now. ICICI Bank being the other one, and that has made a solid move, 4.5% higher, 924 on ICICI Bank is what the pre-open rates are indicating. And then of course HDFC Bank as well. How can we not talk about that, considering the RBI has now provided the regulatory relief for requests made with regard to the merger of the two. Not as much HDFC, but HDFC Bank is the stock to look out for. That may be seeing some reaction come by. Wipro as well is the other one. They're going to consider a share buyback on the April 27th board meet. The market is working with an estimate of 9,500 crore rupees. But what has to be noted is that from the last 3 years, the quantum of the buyback from Wipro has been reducing, although the stock has made a gap-up move of about 6% as we speak right now. The other stock I want to quickly mark is Sun Pharma as well, considering the consent decree that they've got from the US FDA for their Mohali facility. Sun Pharma is currently lower by about 1.5% as we speak. And then, of course, there's Yes Bank, wherein the asset quality has actually declined. So that is well reacting to its earnings. But time to get you some mid-cap ideas, considering it was mid-caps which actually held out and outperformed the benchmarks in the week gone by. Kunal, what's on your radar?
So that's about NCC. Apparently that stock has also done reasonably well. We were covering the stock, when it was at the 77, 78 mark, that how it was poised for a multi-month breakout. It's confirmed those breakouts in a very gradual manner for itself. So I think at 110.11 where the stock closed on Friday, would suggest a buy. 122 could be a target, stop us at 110.
Okay, let's get in your bets then. Naresh, what is it that you're working with by way of mid-cap call?
So that would be a buy on IDFC Limited. The stock has made a flag formation between 76 to 82. Closed well above 82 on Friday. A classical trend out here. The stock has continued in a higher top, higher bottom formation. The recent flag breakout is also taken out. Expecting a quick move to 90 in the short term. Stop loss at 79.
Right. Okay, let's tell you what else is happening outside the world of India equities. And Castrad Bed Bath & Beyond is filed for Chapter 11 bankruptcy protection. The company has sought permission from the courts to auction assets. Meanwhile, do remember that the beleaguered home goods retailer has been warning of bankruptcy since the start of the year. Now, stores across the locations will remain open for the time being as the company begins to pull the shutters down on their business and liquidate assets. And former Russian President Dmitry Medvedev has warned that if the G7 move to ban on exports to Russia, Moscow will go ahead and respond by terminating the Black Sea grain deal that enables vital exports from Ukraine. The G7 member countries are considering a near-total ban on exports to Russia. And US and UK military forces have evacuated officials from the embassies of Sudan. Meanwhile, other nations continue to get their citizens to safety as rival military factions battle in the capital city of Khartoum on Sunday. The fighting began 8 days ago between the army and the Rapid Support Forces paramilitary group has triggered a humanitarian crisis, killing 420 people and trapped millions of Sudanese without access to basic services. And shifting focus to some other updates, and this time around, fresh trouble, it seems, has been brewing for Zomato-owned Blinkit after thousands of delivery executives switched sides and joined rivals from the likes of Swiggy, Instamart, Zepto and Big Basket. Blinkit's executives have been protesting against changes in pay structures, claiming that the said announcement hampers their earnings.
Meantime, fugitive Amritpal Singh has been arrested from the Umoga village in Punjab yesterday, and he's been taken to Dibrugarh Central Jail in Assam. Remember, the pro-Khalistani leader had been on the run since the 18th of March when the Punjab police had launched a major crackdown on the members of the Waris Punjab Day outfit. He's been booked under the stringent National Security Act and is facing charges on contempt to murder, abduction and extortion. Meantime, now from the world of football, the Premier League club Newcastle has sealed their place in the top four of the Premier League with a clear demolition job of 6-1 on Tottenham. This came over the weekend. You also had West Ham that went along the way for a position higher up on the table, hammering Bournemouth with a 4-0 defeat. Meanwhile, sitting at the top of the table, Arsenal fought back from 2 goals to seal a draw in the finals. This was in the final minutes against Southampton. And to cricket, here's what happened for IPL. CSK scaled its journey to the top of the table, defeating the Kolkata Knight Riders by 49 runs. This is the 5th win for CSK and the 4th defeat for KKR.
Alright, now what do we have? We've got the pre-open session is indicating that markets are in for a solid start. 0.5% higher for the Nifty, 0.75% higher, almost 0.25% higher for the Sensex. Nuresh, will you buy the Nifty with the assumption that you got support coming from Reliance, ICICI Bank and HDFC Bank, and Nifty may just push beyond 17,800?
So 17,600 to 17,700 is now the range where I would be a buyer, as well as on dips as closer to 17,600 is the entry point. I expect a dash towards 17,850 in the short term. Post that, we'll review whether we can go beyond that. So shorter term target price for me is 17,850 and a stop loss below 17,550. So on dips, it's a buy.
Kunal, will you buy the Nifty?
Yeah,
irrespective of the gap up start?
Irrespective of the gap up. So I think 50-80 point gap up is not a gap up as such for the index. And look at this way that we've retraced just 200 points in the last 1 week. So trying to digest as much of news flow, events, etc. results for the indices. So even if we scale past, above the previous swing high, which would just be another 160 points on the upside. So if a 50-80 point gap up happens, that would still offer an uptick of at least 160 points at the least, even if you look at the retest of the previous swing high. So the risk reward is definitely in favor.
Let's look at Reliance, HDFC Bank, HDFC Life, ICICI Bank. Heavyweights, Nifty 50 stocks. Where are they? Reliance 1% higher, which is reasonable. HDFC, ICICI Bank 2% higher, great. HDFC Bank, not great. I mean, I was hoping this one would be above 1700. HDFC Limited is okay. HDFC Life is where the overhang gets, the veil of uncertainty gets lifted. So not surprised, not surprised. That's the one, guys. 7% higher. This is like one of those lazy puffy duffy stocks. We don't talk about it. Technical folks have stopped talking about it. Kya hai? Kuch nahi ho raha hai.
Yeah, Nikuj, and the stock post budget, the entire insurance pack has actually underperformed. HDFC Life went through a very similar spate. In fact, in the last 4-5 months, even pre-budget, the stock had corrected very sharply. So there was actually 3 metrics which we looked at in terms of price performance, where SBI Life was apparently one of the best performers. It managed to make a comeback and I think made a fresh 52-week high for itself in the fag end of 2022. ICICI Pru was now number 2 because the stock still held on to its 200-day moving average, but HDFC Life was a clear underperformer. So even in the second half of 2022, the stock underperformed. Post Post-budget, we saw sharp selling across the insurance pack. So that was one of the key reasons why traders were not too much confident of taking too many long positions. But I think hopefully if this move of 7% sustains, which means HDFC Life would come back above its 200 DMA, that could be a classical change of trend for the stock.
Okay, big move in HDFC Life, 7.5% higher. But Naresh, with the strength in FMCG dominated by ITC stay this week?
So I think it's only ITC which is a clear leader. Rest of the FMCG names are not showing some similar resilience. And the other name is Godrej Consumer, which has been a slow and steady move. The stock broke out about 950. It was barely made it to 990 over the last almost 3 weeks. So it's been a slow and steady move, but ITC is the clear winner. Next is Godrej Consumer. Rest of the names, say something like a Hindustan Unilever has gone nowhere in this period of time. The stock just keeps bouncing and stays around the same prices. So ITC at 420 becomes say a little overbought at current prices, not a trade. Time to actually book some profits in ITC.
Okay, there you have it. That's the view coming in. Meantime, let's also get in a quick take as to what the outlook is on the charts, Kunal, when it comes to some of the stocks that buck the general trend within the broader universe on Friday's trading session. How are you looking at TVS Motor, for instance, and Indocount, or even an Aavas Financiers if you track?
So TVS Motors could be interesting. The stock did pretty well. I think it was one of the few large cap auto names which actually had come back towards the previous swing high at a point when the other stocks like M&M, Maruti, etc. These stocks are struggling from the four-wheeler pack, and of course from the two-wheelers you still have Hero MotoCorp, etc., which are still struggling to find their feet. But then I think after Friday's correction, the risk could actually be favorable to initiate fresh longs on TVS Motors. Aavas Financial, I would not be too much enthused with the chart pattern. Even though the risk reward could be attractive, the stock is already at a multi-week, multi-month low for itself. But because of the sheer downtrend and the force at which the stock is selling in terms of volumes, I think it's better to stay away from the stock as of now.
Okay, that's the take coming in on some of the buzzing mid-caps in trade. In the meantime, let's also take stock of what was actually holding out in the week gone by. Well, of course, it was pharma, it was a couple of FMCG names, but on Friday at least you had a big move on a Page Industries, for instance. Aarti Industries, Idea moved quite significantly higher by almost over 6.5% or so. So these were big buzzers in trade. In fact, some of these textile/retail plays did bump up quite a fair bit in the week gone by. And Naresh, just want some reading on the charts for both a Page as well as Trent.
So Page is a bounce back candidate, whereas Trent is a stock which has been holding up well. It is doing much better than the rest of the stocks in the sector. So Trent looks interesting. The stock has an upside to 1450, 1500, which will be a tough one. But on dips, that's the strongest one to buy in this segment. Page Industries is seeing a bounce back, wherein it could it's corrected from 54,000 all the way down to 37,000. This move can take it towards 42,000 to 43,000. And that's where it should take a pause ideally. So from here on, another 3-5% is still left. Volumes have been good in the last two sessions. So Page Industries could be a buy on dips closer to 39,500 with a stop loss below 39,000 and a move towards 42,000. Trend, I would wait for a little more dips.
A minute to go. It's a brand new week and important week. I mean, for me, technically, this is the most important week. 36% of earnings, or that reaction would happen. 18% today, ICICI Bank and Reliance. And then later this week, you've got HUL, you've got IndusInd Bank, and then HUL, IndusInd Bank, Kotak, Bajaj Auto, Maruti. Am I forgetting anything? Yeah, lots of names. Tata Consumer. So a lot of Nifty 50 companies, in a sense, will have an impact on the way of the markets would move. So you are at that juncture technically where you get a little bit of push and support, flows and markets and numbers. Then Nifty can easily go past that resistance mark. You go through the resistance mark in the short term, then that's a big victory for the bulls. This week is important. Why? Because we don't have anything in terms of a global narrative. The global narrative also has died in terms of the negative news. So if you're frankly asking me for a clean shot at a new breakout this week, well, that shot, if it has to happen, I think it should happen this week. I'm going to stick my neck out and say like this because it's very, very logical. First rates, Monday morning, what are we starting with? Well, we're starting with an uptick of about 0.5% on the Nifty, and it is a good start, solid market. solid market breadth, good start, decent opening for small and the mid-cap index as well. Now, when you have Reliance, ICICI Bank, HDFC Bank and HDFC Life, you don't have to capture too many small and mid-cap stocks. Let's look at them. 30 rupees higher for Reliance. 16 rupees higher for ICICI. This is where I was hoping for a bigger move, which is HDFC Bank and HDFC Limited. But HDFC Life is where the real uncertainty, the veil of uncertainty is now lifted. 7% higher for HDFC Life. Remember, nobody likes it, nobody owns it. Underperformance has been quite stark and severe, and when you get positivity, that's how markets have reacted in the past. Now let's look at numbers which are due today, later this week. Bajaj Auto, Microtech also Lodha, that's also reacting to news. I mean, it's just been such a comeback story for Lodha. From brink of going a debt default in the global paper to stock making a new high, and now they're talking about 14,500 crore of real estate sales. I mean, that's like $2 billion. Just bravo to what's happened to the entire real estate space, so to speak. If Lodha is doing well, other Bombay real estate companies will have to join on the bandwagon. Oberoi, Prestige, you got DLF. In the entire real estate space, I guess today is humming with positivity.
Oh yeah, absolutely. The entire realty pack holding us a buzz. Let's see what the Nifty Bank as well is up to, considering ICICI Bank's weight in the Nifty is almost 8%, but in the Bank Nifty, it's a good 23%. Nifty Bank higher by 0.6%. Let's revisit what ICICI Bank is up to. 899 is where that stock is, just about nudging actually that 900 price point. There's Axis as well, which is due to report its numbers this week. That is also holding out well, so look out for that. Wipro, after its buyback announcement, is up 1% as we speak right now. And a bunch of other stocks. There's Aurobindo Pharma, which has also got a US FDA nod for 2 of its drugs. Zydus Life, which has got a final US FDA nod for 1 of its ethyl capsules. There's MapMy India, which has come out with its numbers. The EBITDA has risen about 17.5%. Revenues higher by 27.25% on a year-on-year basis. MapMy India will just come off you on your screens next. And then, of course, on the negative side, there's Yes Bank as well, wherein the Q4 asset quality has declined on a sequential basis and the profits are below estimates. We're going to be chatting with the management as well just shortly on the show. 2.5% lower for Yes Bank as we speak. And then Sun Pharma, that's where you may be seeing a knee-jerk reaction come by given that the news flow is negative from US FDA for their Mohali facility, wherein there is bound to be disruption in terms of exports to the US. 3% lower nearly for Sun Pharma as we speak. But for index, Kunal, irrespective of RIL, ICICI Bank, the index refuses to budge.
Absolutely, Aisha. I think this is a very interesting sign for the markets that with such kind of news flow, such kind of events, the indices are still holding their grounds pretty well for themselves. So I think that's a very good sign for the index overall in terms of the structure and price trends. The trade which I would look to initiate at current levels would be on SPI. I think it's an interesting chart, as I mentioned earlier, that the stock is heading towards a breakout of above the 550 levels. Looks extremely attractive and could probably be the leader which the PSU banking stocks require from current levels.
Okay, so that's SBI as the first trade. Naresh, what is it that you're betting on, given that both you and Kunal were bullish on L&T and SBI?
So continuing to bet on IDFC, focusing more on the mid caps and small caps. The stock is given a breakout and holding around that price points only. So expecting a move here towards 90 in the short term.